Of course, regulation is a hot topic in this industry. And so Wiehann's going to be talking about how that applies to the cryptocurrency and their related businesses, and how traditional regulations impact crypto and crypto businesses. So, Wiehann, over to you. The floor is yours.
Thanks, James. I really appreciate it. Thanks for having me today and welcoming to anyone joining in. The topic that I'm going to be discussing today is the application of traditional regulatory frameworks and exactly how cryptocurrency and cryptocurrency-related businesses fit into this regulatory framework. Just a brief introduction to myself. My name is Wiehann Olivier. I'm a chartered accountant and a registered auditor with the IRBA. And an audit partner at Mazars. Now, I've been involved in the crypto industry for over 3 years now, but my client portfolio includes businesses that operate in industries such as financial services, private equity funds, property funds, manufacture and retail, and also more recently clients in the crypto industry. I've also completed a blockchain and innovation course through MIT in the US, which assisted me to better understand the technology. And in South Africa and many other countries, I've found that traditional audit, tax, and advisory firms tend to shy away from virtual asset service providers and cryptocurrency as a whole, as they're not yet comfortable with the technology. Now, the regulations and code of conduct that govern auditors internationally require us to exercise professional competence and due care. Which means that we need to make sure that we have the relevant experience and expertise to be able to service a client. Now, we were fortunate enough that our International Quality and Risk Management Committee had given our SA office approval to service these virtual asset service providers and be able to issue audit opinions on these businesses' financial statements, as we were able to demonstrate that we had the knowledge and the capabilities to audit virtual asset service providers and crypto-related businesses. Now, our current clients, amongst others, includes the likes of Revex and Luno. I've also assisted our UK office on some consulting on Goldman Sachs accounting treatment for central bank digital currencies. And in addition to this, more recently, our US office also asked us to assist them with Payword's Kraken audit. But the major question is a need to regulate cryptocurrency in South Africa and across the world. Now, the trading or investing in cryptocurrencies through virtual asset service providers remain unregulated in South Africa and across many countries in the world. Now, the aim is therefore to build trust in technology and to educate the general public. Most businesses and individuals that I've spoken to that operate in the industry want to be regulated. This will increase the trust and ultimately lead to the mass adoption. Now, the role that Mazars wants to play as auditors in the industry is to use our knowledge and expertise in the industry, as well as our commitment to quality and independence represented by the Mazars brand, to service these virtual asset service providers and related businesses, to show that the industry can be trusted. Now, while we wait for regulations to kick in on cryptocurrency and virtual asset service providers, these virtual asset service providers need to ensure that they adhere to the current laws and regulations set out there. And of course, from my perspective in the industry that I operate in, these would include Companies Act and audit, financial reporting, and taxation. Now, from a Companies Act perspective and an audit perspective, there's certain type of companies that need to be audited. Now, in South Africa, we have companies that are required to be audited is state-owned companies, public companies, whether listed or non-listed, companies that hold assets in a fiduciary capacity in excess of 5 million rand. That's a very important one. We'll get back in a second, as well as companies that have a public interest score exceeding 350. Now, what I've seen in the industry, most, if not all, virtual asset service providers tend to hold assets in a fiduciary capacity in excess of 5 million rand. Therefore, in most instances, they are required to be audited. Now, there needs to be a clear distinction between the type of insurance engagement that our Companies Act also allows, the one being audit and the other one being an independent review. Now, you can have a look on my LinkedIn profile. There is, under my publication, a article that I wrote between the differences of the difference between an audit and an independent review. But there is significant differences in these type of assurance engagements. But it comes back to the point that virtual asset service providers need to be audited. Now, in addition to virtual asset service providers that need to be audited when they hold assets in excess of 5 million rand, they also need to be audited and produce audited financial statements within 6 months of the year end, according to the Companies Act. Now, if you look, there are other regulating bodies out there, such as the EAAB and the FSCA, that currently require the entities that they govern to submit financial statements in a period of 3 to 4 months or less. So you can see from that perspective, it'll be good practice as well, or good corporate governance, to make sure that these virtual asset service providers are actually able to issue audited financial statements within 6 months after the financial year end. So the question is, why is it important to ensure that virtual asset service providers comply with these requirements? Now, virtual asset service providers are very similar to banks as a result of the assets or private keys that they hold on behalf of investors, and therefore they become accountable institutions. And the fact that these virtual asset service providers are accountable institutions should mean that they must be regulated by some industry, almost the industry watchdog. Now, the question always comes up whether you would bank with a bank or invest with a financial institution, that you are not certain whether they are adhering to the applicable laws and regulations that govern these entities, and that they are adhering to these laws. So the same would apply for a company that you would want to invest in. The question is, would you be comfortable investing in a company that they weren't able to supply you with audited financial statements and giving you the assurance that you need? Now, virtual asset service providers therefore need to ensure that they adhere to all the applicable laws and regulations to build the trust and show their commitment and willingness to follow these regulations. Now, from an audit perspective, just to give you a bit of idea, when we come in and we do an audit, amongst other things, we always look at the balance sheet as well. So when a investor goes to the financial virtual asset service provider and they invest, be it fiat currency or cryptocurrency, with this virtual asset service provider, essentially on the balance sheet of that virtual asset service provider is going to be a liability. And of course, on the flip side, there needs to be a corresponding asset. They're actually holding that cryptocurrency or the fiat currency. Now, as an auditor, of course, one of the procedures that we perform on the liability side is to make sure that the liability is complete. But as well on the asset side, we actually need to make sure that this asset exists and that the virtual asset service provider actually has control over this asset. So just to make sure that, or to give the investors this comfort that they're not investing into some sort of Ponzi scheme where there's fictitious assets. Now, the audit of virtual asset service providers by reputable audit firms such as Mazars will provide investors and customers with the required comfort, but also ensure that these virtual asset service providers adhere to the applicable laws and regulations. Now, from my perspective, audits build trust, as auditors' opinions are independent, and it's that element of independence what gives our opinions actual value. And from my view as well, once cryptocurrency or virtual asset service providers are regulated, all of them will need to be audited. And by looking to the Companies Act, currently most of them need to be audited in any case because of the fact that they hold assets in excess of 5 million rand in a fiduciary capacity. But as soon as it's more regulated and these entities are required to be audited, I believe it will significantly decrease scams and fraud out there that will ultimately lead to more trust in the industry and also assist with a mass adoption. We cannot have an instance where virtual asset service providers go for 3, 4, 5 years without having their financial statements audited. That will send the wrong message to customers and the general public and question the company's attitude towards these laws and regulations that govern these institutions. Now, in addition to trying to prove to the public that virtual asset service providers can be trusted, and by not following regulations will prove the exact opposite. Now, virtual asset service providers and crypto-related businesses are all institutions, all accountable institutions, because they hold custody of millions, if not billions of rands or dollars worth in cryptocurrency. So on the financial reporting side of things, now in South Africa, according to the Companies Act, you are able to apply two different accounting frameworks. The one being International Financial Reporting Standards, or IFRS, or International Financial Reporting Standards for small and medium-sized entities, or IFRS for SMEs. Now, there's a fair amount of difference between these two accounting frameworks in the way that certain transactions are accounted for and certain balances are accounted for, as well as a significant amount of disclosure that's required for financial statements being compiled in terms of IFRS. But once again, have a look at my LinkedIn profile. There's a specific article that I did and also a podcast interview relating to the differences between these two accounting frameworks. So the question now is, which companies are required to apply IFRS and which are allowed to apply IFRS for SMEs? Now, currently in South Africa, it's only listed and state-owned companies that need to apply IFRS. All other companies out there are able to apply IFRS for SMEs. Now, what this means is that you need to have a look first whether you're able to apply IFRS for SMEs in this instance, and whether the standard actually allows it. So, of course, there on the right-hand side, before I jump to that, what was quite interesting is earlier this year, we had an instance where SIPC actually retracted a non-binding legal opinion. And this non-binding legal opinion essentially said that, and it focused more on attorneys, saying that attorneys, of course, they render their normal day-to-day services, but they also hold assets in a fiduciary capacity. Now, the holding of those assets in a fiduciary capacity weren't seen as part of the primary business of this entity. Now, of course, when that legal opinion, non-binding legal opinion was retracted, what that meant was the holding of assets in escrow formed part of this primary business, and exactly the same with virtual asset service providers. The main focus of them are to generate income through revenue, through withdrawal, deposit, with trading in cryptocurrency, but they also hold these assets in a fiduciary capacity. But this now forms part of their primary business. So on the right-hand side, you can see there's an extract of the accounting framework for small, medium-sized entities. So it says there, small and medium-sized entities are entities that do not have a public accountability. Now, as any good auditor, we had a look at the definition of public accountability, and it says there, the paragraph just below it, an entity has public accountability if it holds assets in a fiduciary capacity for a broad group of outsiders as one of its primary businesses. Primary business being, of course, the holding of cryptocurrency on behalf of others. So therefore, you can't apply IFRS for SMEs. So virtual asset service providers can therefore only apply IFRS in South Africa and most other countries, but of course this does have its advantages. Now, once again, IFRS was created without taking into account digital assets such as cryptocurrencies, and therefore there's not yet a specific standard set for cryptocurrencies. So we specifically need to look at the current accounting frameworks out there and where does cryptocurrency exactly fit in. So we first had a look at cash because it was the obvious choice for classification of cryptocurrency. But when we had a look at the standard, one of the requirements was that it needs to be a monetary unit. And cryptocurrency itself, there wasn't enough practical examples out there where cryptocurrency was seen as a monetary unit. So we weren't able to apply the classification of cash. So the next logical step was to have a look at the financial instruments. Now, on the financial instrument side of things, for financial instruments would usually be something like listed shares or maybe investments in a unit trust or something of that sort. So you can see there on the slide as well, there's certain criteria that needs to be met. It needs to be cash, which cryptocurrency, of course, is not in the classification or the definition of IFRS. It's not an equity instrument of another entity. There's no contractual right in place. and there's no contract in place, so we couldn't classify it as a financial instrument for IFRS purposes. So this essentially left us with two options. The one being almost like the default option, which is intangible assets, and the other one being inventory. Now, there is some technical considerations as well as some limitations towards these two standards. From my view and my preference and what I've seen in the industry as well, it makes much more sense if you are able to classify your cryptocurrencies as inventory, because of the fact that standard allows you to actually fair value your investment. So if there's an increase in the decrease in the value of your cryptocurrency, it's accounted for in your income statement. But if you account for it as an intangible asset, it creates a bit of a mismatch. So any decreases in the value of your cryptocurrency will be accounted for in the income statement. But any increases above the original cost will be accounted for in the statement of change in equity. So you do have a bit of a mismatch. And from a reconciliation, and as soon as you're working with customer funds, it does become quite a nightmare. Then the other standard that also is impacted by the application of cryptocurrencies is a standard called IFRS 13, fair value measurement. And the standard basically says that all assets and liabilities that are fair valued needs to have some certain classification and also disclosure in the financial statements. And the disclosure actually requires you to list the hierarchies of the different classes of fair value, if I can say it like that. And those different classes is dependent on the type of inputs also used to determine the value of the cryptocurrency. But there is some technical consideration that needs to be given there, because there's not one global Bitcoin exchange out there. There are multiple Bitcoin exchanges across the world, or cryptocurrency exchanges across the world for that matter. Now, there's actually a quote that summarizes this quite nicely from an accounting perspective. And it says, it's a quote from Law Abiding Citizen. It says, it's not what you know, is what you can prove in court. And essentially that's it. So in the financial statements, the directors of these companies actually need to disclose on the financial statements that the estimates and judgments used in determining how they're going to classify cryptocurrency and how it's going to be accounted for. Just a clear the disclosure on the financial statements in that regard. But this essentially brings us to the last topic, and that's taxation. I think that's the most talking point, or the biggest talking point when it comes to cryptocurrency, and the most thing people want to know about. And it becomes extremely important for virtual asset service providers to differentiate between what is realized gains and what is unrealized gains, of course, for accounting purposes, because the tax impact of that is quite significant, because currently in South Africa and some other countries as well, you only tax on your realized gains and not your unrealized gain. Because it's, as you saw on the income statement, if you can fair value your cryptocurrency to the income statement, any unrealized gains is added back for tax purposes, and you're not taxed on that. But in addition to this, there needs to be a clear segregation of what is attributable to the investor and what is attributable to the virtual asset service provider itself. Because, of course, that tax burden, the tax liability needs to be moved on to the investor. Now, when we had a look at current legislation in South Africa as well as overseas, it was quite interesting looking at UK and Europe and the US, where you actually taxed on realized gains. And realized gains is seen not just crypto to fiat, but also crypto to crypto. And in South Africa, we haven't had any clear clarification whether crypto to crypto is also seen as a realized gain, or it first needs to be almost, transferred to a fiat currency before you're actually taxed on that. But there's a lot of ins and outs regarding the tax, and still a lot more coming, as well as the information that these virtual asset service providers might be required to share with tax authorities as well. But once again, it goes into extensive detail, and there is an article on my LinkedIn page. You can have a look at that under my publications. I actually wrote one that addresses cryptocurrency and tax. That's it from my side. Thank you so much for your time. I hope that I was able to add some value to investors of cryptocurrencies, as well as founders and CEOs of these virtual asset service providers. So as I mentioned, you can have a link, look at my LinkedIn profile there. It's Wiehann Olivier. My mother and father, specifically, I don't know how they came to the wording of Wiehann, but there's only one I'm aware of.
Great stuff. Wiehann, thanks so much. That was incredibly insightful. And I think a lot of crypto traders are going to be taking heed to that advice and probably going to be hitting you up as well. So check them out. Mazars, as you saw there, they are on Twitter, Mazars_SA, and you can find them on LinkedIn as well. Or Wiehann Olivier, as you heard. There's only one Wiehann spelled like that. That's nice and unique. Wiehann, thank you so much. We appreciate it. And we look forward to catching up with you later.
Perfect. Thanks, James. I appreciate it.
Cheers, Wiehann.